Everyone, how we doing today? Well, it is Saturday, May 23rd, and of course, we start the day by doing our daily show, which is what I call the daily financial news. So, on this morning, real quick, couple of things to kind of point out before we get started. First and foremost, thank you for those that were new subscribers yesterday. I do have a kind of soft goal of trying to get to 7,000 subscribers by Memorial Day, which is just around the corner. I think we're about 80 or so subscribers short. So if you can help me, if you enjoy daily financial news, even on a Saturday or a Sunday or Christmas or Father's Day or Mother's Day or whatever, do me a favor, hit that subscription button. That would be great. And then next up, that 75-day hard challenge for real estate investors is picking up some steam, which I am glad to see. I've always looked for a way to try to create motivation, try to help people see the discipline that was a key part of our 15-year journey. And the best part is all 8 of the steps are free. It just takes time. So pretty glad to see the warm reception to that idea. And it's going to be fun. I'm probably going to record some live streams today or tomorrow talking about each of the 8 steps. I will have a playlist called 75 Hard Challenge. So you can expect that. I will be doing various live streams, just easier for me to do it that way. So without further ado, let's just get started, kind of no particular order. First and foremost, Hertz. Hertz finally did file for bankruptcy. Kind of to be expected. Very leveraged balance sheet. Too much debt, not enough income. Boom, big problems. One thing I don't know, if you're in the market for a yellow Corvette, I think they were Z06s, I think. Hertz is selling 40 of them. I think they ranged from like 55,000 to 65,000. So if you wanted a yellow Corvette that was in your wheelhouse, Hertz has some for sale. Another thing I saw is there is brewing unrest in countries that have been on lockdown. U.S. is not out of the woods yet. We have some protests as well, but what caught my attention was Spain. Spain, as we know, had some of the most strict lockdown measures in Europe, and they are getting kind of cranky, right? They want to be let out and go forward. So things to watch. Clearly, the hot spot for this health event has gone south. It now appears to be in Brazil. We need to watch that because, again, this thing travels, and there's always the great fear that it comes back around. So we need to kind of watch that and help if we can. The big news I saw from Dr. Fauci. First off, I'm guessing he was put in the penalty box because I didn't see him on TV or even hear about him for like 10 days. And then yesterday he comes out with a quote that says, if we stay in lockdown too long, it will cause irreparable damage. First off, duh. I can't believe it. So we got a note from a listener that are you from Brazil or are you in Brazil? Let us know what's going on if you hear anything. I'd love to get firsthand accounts. Thank you for that. Thank you for watching. But again, back to Dr. Fauci. No kidding, irreparable damage. It is. It's like, it's interesting to watch how. It's interesting to watch all of our scientists, frankly. It's interesting to see what they were saying, and now that they're kind of evolving. So we will see what happens there. But again, yes, we are about to see what a lockdown of a consumer-based economy does with a 35 or 40% fall in GDP. So it happened. It's on its way. Something we're seeing now in mortgages is rise in delinquencies. Lots of people are talking about what is going on with forbearance. Going from memory, the last count I saw was 4.7 million in forbearance. But there's also mortgages not in these federally backed programs, and now they are 3.6 million delinquencies on top of the forbearance requests. So you got to realize that a lot of the talking heads on TV are talking about the forbearance number and 10% of FHA loans and all of that. But there is a brewing problem beneath the surface that grew by 1.6 million just in the last 30 days. So we do have a delinquency problem. We're starting to get data about states and cities. It's always nice to see if the data matches your expectations. The states with the greatest delinquencies, I bet you if you guessed, I got the top three. My guess is you could guess two of them pretty easily. Let's see if anybody guesses them. I'll give you a couple of seconds, see if anybody puts it out there. All right. So the number one state with delinquencies, drum roll please, Nevada, 8%. Number two surprised me, New Jersey, 5.1. And it didn't surprise me it's on the list, but it did surprise me that it was second. And then yes, New York is third at 4.9. So again, those are the states. I did go a level deeper, and we also have cities. Now this is interesting because the number one city, let's see if you get this one, folks. The number one city is not in Nevada, New Jersey, or New York. Think about that one. You got to guess for what city has the most delinquencies on a percentage basis? This surprised me a little. It's Miami. Miami has 7.2% delinquencies. Yeah, Miami. I would have actually guessed Orlando was worse, but Miami's at 7.2. Las Vegas, no shocker there, 6.2, and then New York City at 5.4%. So we're starting to see where the pain is. The next question is going to be, what happens with unemployment? Unemployment in Las Vegas, I heard from Brian Lebo the other day, is nearing 30%. That's uncomfortable. That's uncomfortable. And again, seems to be clear that unemployment benefits will not be extended. At least that's the current rhetoric. Frankly, I don't believe that. We have an election year this year, and I can't imagine the folks in office want to see the repercussions of not being able to pay mortgages and rents as we roll into November. It just doesn't feel like a good chess move to me, but who knows? I don't like politics, but that's what I think is happening. Got some data from the Multi-Family Housing Council. A lot of, and this actually came from viewers of this channel sent me some links, so I appreciate it. Thank you very much. I read most of the links that you guys send me when I have time, so that is pretty awesome. So let's take a look. So May, 22% of rents and or mortgages were not paid. That is up from 12% in April. So I find that interesting. That's quite a big jump. My May collections were actually 101%. 101. Basically, we had some delinquencies that were caught up. So my May collections clearly benefited from the stimulus check and unemployment where needed. Again, 101% rent collection in May, where in April, I think it was 98 and change. I might have rounded to 99. So I just found that interesting. Multifamily Housing Council was trying to look at the data and kind of trying to poke around the corner and sort of guess what they were seeing in the future. Again, this was a housing council, multifamily housing council. So I would normally think their opinions are skewed, but I actually like what they had to say. First and foremost, they expected the affordable housing sector to see increased activity, both from a supply and a demand side. In the article, they talked about a lot of the last 2 or 3 years have been about generating new Class A material or units. And that is the wrong thing to have as you're entering a long potential recession, right? An L-shaped recession. They are expecting inventory in the high end to force rent reductions, vacancies, economic vacancies to go up. And they see pain in the Class A area where there seems to be a lack of supply, and they're forecasting years of demand in the affordable market. So I thought that was interesting. So again, they're calling for rent deflation on the high end and economic occupancy to go higher. in the high end, which I thought was interesting. They do see maximum pain in three markets: Las Vegas, again, no kidding, Orlando, and Miami. Back to Las Vegas. I currently have another call scheduled with Brian Lebo, the Las Vegas real estate agent, today, I think at noon. Might be 1. We'll see if that happens. Hopefully it will. And we're going to talk more about Vegas because, again, the numbers are just crazy. 30% unemployment, 8% mortgages late. It's setting up. On the stock market front, what we are very soon going to see is we're going to see a battle between the bulls and bears. I'm not much of a chart guy, if you will, but we are getting really, really close to the 200-day moving average. And we're going to quickly find out, I think, who's right. All the billionaires who go, I don't get it, I'm not investing here at these prices, or the Main Street investors, right? I did some research, and it's pretty amazing to see all the growth in the Robinhood accounts. Let me look at this up. On December of 2019, there were roughly 4 million Robinhood accounts. Now, in May, there's 12 million. So we saw, what is that, 200% growth in Robinhood accounts in 6 months, roughly. And it's clear, the chart is clear. As the market bottomed, the Robinhood accounts spiked with this. So I think it's pretty clear who's buying the market. The retail investors are going in. This feels so .com era to me. The .com era, everybody was talking stocks. Everybody was doing pets.com and Webvan, and I can't even remember all the names that lost me money. And it worked. It was awesome. It was awesome. And then it wasn't. It's what it feels like to me. It's why I'm not in the market. So I just want to put it out there. Nothing would make me happier to be wrong than see the stock market double. That just means people feel better. I just don't see it. I just don't see it. And I see a setup very much like the .com era, where at some point the rug's pulled out, and we frankly find new bottoms. So watch out, new investors. If you have some profits, profit taking is never taking a profit's never a bad idea. So be very careful. And then finally, we have to talk about Sweden. We've talked about Sweden a couple of times on this show. Basically, they attacked the shelter in place, or social distancing different than any other country in Europe. And I think the data's mixed, frankly. They did quite well for quite a while, but just this morning I saw some data that at least would make you question what is going on. And that is, they have the highest death per million. Right now they're at 8.71, which always makes me weird. How can a 0.71, but anyways, that's the data. Where the US, just for comparison's sake, is 4.59. So what do you want to call that? Let's just call that a double. A double. Don't know how long it will last, right? Because we could be in the middle of the peak. That's the whole challenge with this data, right? If you saw the charts, they could just be in that really, they went, like this, and everybody else was flat in the curve. So I certainly think it's unfair to look at any one day. Sweden is going to be a case study for us in 60 days, because we'll be able to look at the totals and see what happened. And we'll be able to see what was the economic impact versus the health impact as well. It is not fair to take one data point and judge success or good, just like it wasn't fair 3 weeks ago to say, look at them, they're awesome, let's do that. That's not how this is all working. So and then lastly, we're going to have to watch the U.S.-China rhetoric. It is not going in a great direction. Both economies are injured. Injured animals, as we all know, are very, very dangerous. We do seem to have current executive leadership on both sides that aren't afraid to flex their muscle. We do have things both supply chain related and trade war and also what is going on with other countries, such as Hong Kong. So we need to watch this. This this does not feel good. It feels almost like egos are getting involved, and when that happens, it could be bad. But again, plenty of time to see that reverse course. It's just something I wanted to put out there because I think it's something we all need to watch, because one tweet, one China message could really ratchet this up. So let's just know that's going on. So at the end of the day, that's what I got for you this Saturday. I will be doing another live stream here probably in a little bit, talking about the good and bad news. Yesterday I had two great things happen and one horrible thing. So I will do a live stream on that, just to remind you that this business has its ups and downs. So it happens sometimes, three. I don't know, why do things happen in threes all the time? So I had two things happen yesterday and one horrible thing. So we'll talk about that. And I did get a note from a Dave Ramsey investor asking a question. So I'll probably do a subscriber question on Dave Ramsey. And then I do want to do the live streams on the 75-day hard challenge. And of course at 9, I'm talking to my students on a live stream on our Facebook group, answering all their questions of the week. So at the end, have a wonderful day. Stay safe, stay healthy, have some fun, make some memories. Take care. Bye.